Good morning, folks. This is Michael. So I'm going to be looking at shorting the NASDAQ. We're looking at a 2-minute chart here, simply because that's where the inefficiencies are obvious for me. I'm going to set a limit to sell short inside of a sell side imbalance, buy side inefficiency. I'll note that in a moment. It's also aiming for the sell side liquidity pool, resting relative equal lows right here. Okay, so there's my target and my stop loss. The stop loss is above the first candle in the SIBI, which I'll note for you here. I'm including the volume imbalance. You'll notice that at the lower end of it. And now that we're back inside of it, the limit order to be short one contract has been filled. If it can go to consequent encroachment of that SIBI, I'll be interested in selling more. I'm annotating the buy stop liquidity raid. So that liquidity has been purged. So the market should explore lower, looking back into yesterday's regular trading hours. Okay, I'm adding there just around the consequent encroachment. Gotta fix this. This isn't where I wanted it. I want it on the top left. And we'll make it a little bit bigger so we can see it. Okay, so essentially it's a turtle soup and it's a deferred entry. All right, so presently short 2. Risk is defined at the high of the SIBI. And again, aiming for the sell side liquidity down here. This is kind of like a classic setup where we've already ran out liquidity prior to the opening bell at 9:30 Eastern time. So we have a shift in market structure, and I'm adding more here. If I can get 4 contracts on, I'll certainly try to do it, but the opportunity to get a break below the low formed at around 21,698, that should start to accelerate things. As long as you stay in the lower half of that SIBI that's noted here, once we break that low. Magnify this a little bit. See the bodies of the wicks better. Okay. So if we can see that low I'm having the limit order to cover the short at, again, was referenced on the relative equal lows. So don't lose sight of that. I'd like to see it break below that swing low that's just recently formed. And then it can work back up and touch the bottom end of that SIBI again. And I'll annotate the inversion fair value gap now that I think it's validated. One more look here at the time here. Notice the run higher to take out the buy side started at 7 a.m. That's classic pre-market session activity. Now, in a perfect world, we could just start going lower, but because we're just ahead of the 9:30 opening bell, it might want to whipsaw a little bit in here. I don't feel that the stop loss is in jeopardy, but it could be hit. If it does get hit, I'll look to reshort. So one of the things that let me move this underneath that low. One of the things that I like to see is the unwillingness for price to get back to the premium side of an array, like for instance, the sell side imbalance, buy side inefficiency, that little red box I've highlighted here. We've already worked in the upper half of that, so I want to see it stay in the lower half. If it does go back and trade to it, if it does, again, trade inside of that, I'm not really unnerved by that. It's completely permissible because of the opening range beginning in a couple seconds. Usually there's a little bit of a flurry of action right at the ninth, everything like that. Okay, see how quickly it just sharply rejected that? These are all signatures I like to see when prices giving indication that it's I'm likely on side. Now, all of this might make you nervous if you're watching it. You're looking at that stop loss thinking it's going to run up here and jump and hit that. And maybe it can. Maybe it might do it. But I'm not thinking that. I want to see it break down and make a lower low than that swing low. One candle ago. There we go. Now, any retracement back up into the low of that SIBI, if it does so, I'll add one more contract. My stop loss, I'm not interested in moving yet. Now I'm looking at about the middle of it. Okay, so approximately where my average entry price is for the existing short position. If it can trade back into that same price level, I will try to time that with a market order to sell one more. I don't think that it's going to give me a chance, so I'm going to just add it there now. So I'm still technically inside the SIBI. And also the inversion fair value gap right before the buy side liquidity is taken. I'll annotate that in a moment. I'm trying to pay attention to what this is actually doing. Okay, that's nice. I'd like to see it get real heavy in here. And again, you're probably wondering, why am I looking at a 2-minute chart? Is there some kind of secret to that today? No, just the SIBI I'm highlighting here can be drawn out over one 2-minute candle versus the broken up 1-minute imbalance. It's got multiple fair value gaps on the 1-minute chart in the same range that's highlighted here. So that's the only advantage I'm using the 2-minute chart. So I taught this in the 2024 video lineup on the YouTube channel, so you can go back and listen to that. I made that very clear. Once you have a bias, you know what you're looking for, you know the draw on liquidity. All those things are foundational, but the timing is based on either a 5-minute, 4-minute, 3-minute, 2-minute, or 1-minute chart. Whichever one has the cleanest inefficiency that you can work with, define that type of thing. It can touch the lower end of that, but if it trades up inside of that pink box, I want to see it stay in the lower half. That's very, very critical. And it's also working in the aspects of this inversion fair value graph. If I get this thing to drop on the right candle, there you go. So far, it's a little unorganized, but the draw is still very much obvious. The liquidity has been taken on the buy side. Traders that are buying on a breakout, They're they're caught offside right now. They don't realize it yet. Right now, they're just hoping it's going to move in their favor. Half of that inversion fair value gap, the one that's orange, I want to see price stay below that as well. So it's a combination of two things. I want to see it stay in the lower half of the pink box, which is the SIBI, and I want to see it stay in the lower half of that orange box, which is the inversion fair value gap. So my thought process is I'm going to break lower and go below that low right here. That's what I'm annotating. So that candlestick should be the definition of the high of that return back into both SIBI and inversion fair value gap. So if my read on price is accurate, it should be unwilling to trade in the upper half of both of those rectangles I've drawn, highlighting inefficiencies. That's about where I was filled on that fourth contract. So I'm going to highlight the midpoint here. You can see consequent encroachment. Pretty much nailed it. So I would have added that fourth one when it just was touching the low of it. So either way, I would have got that fourth contract on. I'm going to sit pat with what I am right now. I don't want to go anymore. And I'm not going to do any partials. So it's going to be a full pull to sell side liquidity if I can get it. It starts to break down in here. That'll be a good indication. I want to see a lot of heaviness, big, long, stretched out black candles. So I want to see a lot of desire for price to probe lower and close in some of that opening range gap that's not clearly defined here, but I'll let you look at your charts in relationship to that idea. I'm trying to keep the annotation as light as possible because I don't usually put this stuff on the chart when I'm trading. But for the sake of you watching and following along with the logic, where was my premise on entry? Why was my entries where they were? You're seeing that here. So far, this is exactly what I want to see. I want to see a lot of heaviness here. There's a little bit more. I want to drop that stop, reduce some of the risk. I won't be so interested in chasing with the stop loss, but I want to reduce it now here, and that'll stay with the life of the trade now. Not interested in moving anything else. If it comes back and stops me out, it covers commission costs. It gives me enough for a pizza dinner, and it'll be whatever it is. But I'm more interested in following along with price action. Does it want to reach for that low? And if it does, it might punch through it a little bit further than my limit order is marked. So if it does so, it might not reflect the execution label. So I want to take that in consideration here and kind of like scrunch the chart up a little bit vertically. So that way, if it does go below it, it should allow me to share that with you. Oh, I hate when they do that. It should film. There you go. Hope you enjoyed it. Take care and be safe.